Recently, you have seen that reassessment proceedings has increased in this last couple of years. To understand the intricacies of the reassessment proceedings, have do's and don'ts of reassessment proceeding, we have with us Mr. Ketan Vajani. I would like to introduce Mr. Ketan Vajani. Ketan Vajani is a chartered accountant practicing since last 22 years. He, he is a senior partner of Vajani and Vajani Associates. Vajani and Vajani is regularly appearing before ITAT, CIT Appeal, CIT in direct tax matter. He is a rank holder in CA final examination. He is a member of Managing Council of Chamber of Tax Consultant and he is a chairman of our own committee, Direct Tax Committee at Chamber of. His achievements are he's a regular he writes regular articles in the Direct Tax Journal, contributes articles in newspapers, members of editorial team of budget publication of that Chamber of Tax for past 3 years and compiler team of for last 19 years. He is a faculty at various seminars organized by WRC, Chamber of Tax and Rotary Club, Indian Small Scale Association, Business Association, Dena Bank and all this, and group leader at various study circle WRC. He is a regular group leader at RRC of Chamber of Tax Consultant. He has a vast knowledge in the area of direct tax. With this, I introduce Ketan Vajani and request him to carry. I would like to hand over a memento as a token of our love and affection.
Good evening, everyone, and welcome on this webinar on this provisions of reassessment. Of course, being a committee chairman, my dual role to welcome you as a committee chairman also, and coincidentally today I am taking this responsibility of dealing with the provisions of reassessment. Reassessment, as Dinesh Bhai has also observed, has increased tremendously in last couple of years. Not many issues are there which are affecting the participants, affecting the professionals at large about reassessment. Many issues like starting from penny stock to share premium and also the bogus hawala dealer, of course, now that is subdued to quite an extent. So those are the issues which keep on hampering the tax matters of many clients. And therefore, we all are accustomed to live with the reassessment provisions in last few years, at least right from 2014. This reassessment has been on a very big move. It's a big curative amendment, curative provisions which the Income Tax Act carries, and the assessing officer is having a very valuable right in the form of reassessment under 148, 147, whereby he can make the corrections of his mistake. But whether the question is whether those powers which are there in the hands of the assessing officer are not are absolute power, or there are some restrictions, that those have to be seen, because there are, as per the act, there are many provisions which are keeping checks and balances on this provision, and in fact this is a provision which is not to be used in an arbitrary manner. We have court rulings which are saying that these are arbitrary, these are provisions which has to be used only in the manner in which it has been prescribed under the act, and if you violate the norms which are prescribed under the act, then the courts will come into play and the courts will strike down those type of reassessments which you want to make in a fair play manner. This is the whole concept of reassessment. We'll deal with various provisions of reassessment, and we'll take the subject and we'll try to understand the issues which are emerging also during the course of our talk. So agenda, we can say there are 3 P's primarily which we'll try to cover up in today's talk. One is the provisions of the Income Tax Act. First of all, of course, the bare act, the provisions of the Income Tax Act, which are the provisions which are dealing with the reassessment. Second, we can look at the principles, some of the principles, the golden principles which are emerging out of various court rulings, and the fundamental principles we can say relating to this reassessment procedure. And also the third is the procedure which one has to follow. Once you receive the notice, what you will have to do and what type of action you need to take and what the department has to follow. These are the 3 P's which we will try to cover in today's talk, and we'll try to understand the whole subject in around say around 1.5 to 2 hours time. If there are any questions, you are all most welcome to please keep on typing in your dialog box. We'll try to cover up all the questions towards the end of the session. So with that background, let us look at the provisions first. The Income Tax Act, the bare provisions of the Income Tax Act. And therefore, these are the provisions. Section 147 deals with power of reassessment. This is the first section and the foremost section of the reassessment provisions. 148 deals with issue of notice, etc. 149 provides time limit. 150 also provides for reassessment in pursuance of an order under on appeal, etc. 151 is also very important provision which deals with sanction for issue of notice. If there are no valid sanction, we'll see during the course of our talk, we'll come to that slide when we see that. If there is no valid sanction, then in such a situation, the reassessment can be quashed. So that is also very valid provision, very relevant provision one has to see. 152 is also very relevant. There are some other provisions we'll deal with that also. And 153, of course, deals with the time limit for assessment, reassessment, search assessment. All the time limits are provided under 153, as we are aware. So these are the provisions which one have to deal with. And one has to understand what is provided under the Act of all about reassessment. So let us start with the first primary section, 147. 147 is the primary section, and let us try to. What I have done in this slide is I have tried to bifurcate the section in such a manner that we understand each and every part of the section in a proper manner. This is section 147 is a very worrisome section as such for an assessee, but there is no subsection. So this section contains only the main section, and then there are provisions and explanation. We'll deal with those also, but this is the main section which is there on the slide at present, which says that if the assessing officer has reason to believe that any income chargeable to tax has escaped assessment for any assessment year, he may assess or reassess, and then let us bifurcate the further things. He may assess and reassess what? Such income and also any other income chargeable to tax which comes to his notice subsequently in the course of the proceeding under this section, and he may also recompute loss or depreciation allowance or any other allowance. This is the whole provision. This one section deals with the entire subject of the reassessment. Of course, 148 are there, but this is the main section which one has to be absolutely clear about. This is the bifurcation, the slicing of the section. We have divided into proper phrases whereby each and everything has some meaning. Therefore, this is the main section which one has to understand. Section 147. As I said, there are a few provisions and a few explanations in the section. The first provision is a situation. It deals with an reassessment beyond the period of 4 years. So, if the assessing officer wants to make a reassessment after the period of 4 years from the end of the assessment year, the provision comes into play. Otherwise, the main section is normally there if it is within the 4 years. The first provision provides that where an assessment is made under 143 or 147. So, if the original assessment should be a scrutiny assessment, loosely speaking, then no action can be taken under this section after expiry of 4 years from the end of the assessment year, unless this is the condition. So, if this condition is fulfilled, then and only then the reassessment can be made under 147 beyond 4 years. So, if the income chargeable to tax in the original assessment, if the income chargeable to tax has escaped assessment by reason of the failure on the part of the assessee to what? Failure for what? Failure to make a return under 139(1) or 142(1) or 148, or to disclose fully and truly all material facts necessary for assessment. So if this one of the two failures are there on the part of the assessee during the original assessment proceeding, then and only then the officer can take recourse to 147 beyond the period of 4 years from the end of the assessment year. Therefore, one has to be more clear. One has to be very clear that during the course of your original assessment, you make all the disclosures, all the submissions, all the documents which you submit are covering fully and truly all material facts you are filing. If you do that, then you are prevented by this provision, so as to say that after 4 years at least the 147 cannot be done in your case. So one has to be very careful in the original assessment proceedings itself. Moving forward, the second provision is there. Second provision says that this limit of 4 years will not apply in a case where the income is in relation to a foreign asset. So if it is a foreign asset which has escaped assessment, 2014 or 15, people will remember that 2014 or 15, there were big amendments on account of this foreign assets, foreign transaction. And if any of this income is escaping because of the uh, investment in foreign asset, then the whole limit of 4 years will not be applicable, and then it will be a normal section 147, not gone by provision 1, and therefore that fully and truly disclosure etc. will not come into play in such a situation. The third provision is there, which says that the issues which are subject matter of appeal, reference or revision cannot be subject matter of reassessment. This is very important provision one has to understand. Say for example, a case where your matter is already there in the appeal. Now, if on one of the point you are already in the appeal and the officer proposes reassessment in respect of the same assessment here, therefore this third provision provides that in such a situation, no, he is not allowed to make a reassessment. Why? Because the fundamental concept remains that the CIT appeal is a higher authority on a higher pedestal as compared to the assessing officer, and therefore when the CIT appeal is already envisaged, already seized of the matter of your appeal, or maybe there is a revision of 263 proceedings are going on, or there is a reference to High Court etc. In such a situation, you don't have the power, the officer does not have a power to make a reassessment in respect of the same year, because the higher authority's order will prevail. If your matter is, say for example, pending before CIT appeal, then in such a situation, the CIT appeal is also having the power of enhancement. So why not he does that instead of the assessing officer doing something like 147 and repetitive proceedings? Your one proceeding is already pending, and therefore the assessing officer should not again do this, and therefore this third provision is very applicable, which says that in such a situation the reassessment cannot be done. The issues which are subject matter of appeal cannot be again decided by reassessment. Many times the department also tries to, whenever they lose, say for example in ITAD, or for example in CIT appeal on a particular issue, then on the same issue he will try to make a reassessment and bring the same income to tax again. This is the problem which happens, and therefore it is not permitted by way of third provision. We have got this few decisions on the subject. Bombay High Court in Metro Auto Corporation, also ICICI, and Gujarat High Court in the case of Vodafone, who dealt with this very same issue, very particular, this particular issue, where Metro Auto Corporation, for example, was a case where the appeal was CIT appeal was decided, and the issue was decided, and the assessing officer tried to make a reassessment on the same assessing on the same issue. Bombay High Court said that no, if you are aggrieved by the order of the CIT appeal, the correct course of action for you is to file an appeal to the ITAD and not make a reassessment on the same subject. And therefore, you should go to ITAD. That right is available to you. You please go to ITAD and do it. You cannot come in a reassessment. Similarly, ICICI Bank was a case where it was decided by ITAD, and the department did not file appeal to High Court, but they tried to make a reassessment. Somewhat similar is the case of Vodafone SR Gujarat. This is the position of third provision. One has to be very clear about this. If at all you are facing this type of situation, because many a times, though these decisions are there, the department is having the habit of making difficult times for the assessee, and therefore if you have this type of cases which are coming to you, you can take recourse to this third provision and try to save yourself from the third clutches of section 147. Then we have got, after these three provisions, we have got few explanations. Let us deal with those explanations as well. First explanation says that mere production of account books or other evidence from which material evidence could have been discovered with due diligence will not necessarily amount to disclosure for the purpose of explanation 1, for the above purpose, sorry. So for the purpose of provision, first provision, when we are saying that if there was a full and true disclosure on the part of the assessee, then in such a situation, there cannot be a reassessment beyond the period of 4 years. That is what we have seen in the first provision. Now, the explanation 1 says that just because you have produced the books of accounts, or just because you have filed some evidence during the course of your assessment, you might be filing many papers. Just because you file something in the paper book in the assessment stage, you cannot say that this is amounting to full and true disclosure. It does not stop your responsibility does not stop there. You have to be giving complete facts to the assessing officer. Just filing the paper or just production of account books you produce once and you take it back, that will not amount to a full and true disclosure. That is what explanation 1 says. Though it may be possible for the assessing officer with due diligence, he could have investigated the real facts, but that is not the explanation 1 says that is not expected, that he will be applying all the due diligence in the case, and therefore mere production will not be necessarily full and true disclosure. Of course, coupled with the production of account books or documents, you also explain the case properly, then it will be a full and true disclosure. So it boils down to the facts of the case. Ultimately, each fact will be deciding the matter, whether you are governed by explanation 1 or proviso 1. So one will have to be very careful. One will have to make a proper representation, and in the disclosure, the papers which you file, the covering letters, etc., during the course of assessment, you will have to mention the facts properly, so that at a later date you will not be facing this situation that you are hit by explanation 1, and therefore proviso is not proviso will not come to your rescue. That type of situation should not arise, and therefore one has to be very careful while drafting your explanation letter or covering letter to the assessing officer when you file the details. Explanation 2 deals with a deemed escapement of his income situation. Under explanation 2, this is a deeming fiction, in fact, which says that the income will be deemed to have escaped assessment in this situation. 4, 5, A, B, C, D, E, etc. has been provided. And one more clause has been inserted with effect from Finance Act 2016. We'll see in the next slide. But this is the primarily clause when in a situation where no return is filed, but income is above basic exemption. So in that situation, income will be deemed to have escaped assessment. Similarly, where the return is filed, but there is no assessment and AO letter on notices that the assessee has understated the income or has claimed excessive loss, deduction, allowance, or relief, etc. In such a situation, it will be deemed as escapement of income. Then TP report, if you don't file, non-furnishing of transfer pricing report amounts to a deemed escapement of income. So one has to be very careful. You have to, if your transfer pricing provisions are applicable to you, please ensure that you file your return in time along with the return as may be prescribed, as may be provided, or through internet, whatever may be the applicable provision to you. You please ensure that you are filing your TP reports. Otherwise, it may be treated as a deemed escapement of your income. Then similarly, assessment made, but income is underassessed or assessed at lower rate, or excessive relief is granted, or excessive loss or depreciation or allowance has been granted to you. In such a situation, there will be a presumption that the income has escaped assessment. And also in a case where assessee is found to have foreign assets. So these were the provisions where for quite many years these were the provisions, and we have got one amendment by the Finance Act 2016, so which also further adds one more clause CA in the explanation 2 to section 147. In fact, there was one Gujarat High Court decision in the case of Varshaben Sanatbhai Patel, where it was a case where the Gujarat High Court has held that just because there is an investigation by DGIT, some information is given by the DGIT investigation, it's an outside agency ultimately. Director General of Income Tax, though it is an income tax authority, but he is not assessing officer. And therefore, in such a situation, the information provided by the DGIT will not be sufficient to say that this is a valid information in the hands of the AO. And therefore, merely on the basis of that information, if the AO makes a reassessment, that will not be a valid reassessment. That is what Gujarat High Court held in this case of Varshaben Patel. Of course, in 2016, thereafter there is an amendment. So this decision is now no more relevant. In 2016, that amendment was there in two sections. One was under 133C, which deals with power to collect information as per by the principal DGIT, etc. There, the Finance Act 2016 provided that now the DGIT does not have power to merely collect the information, but also he may process such information or document, and he can make available this document to the AO, to the respective AOs, whoever people are found, some information is found about some particular group of people or particular class of people. The DGIT is having the power to process this information and pass it on to the respective AOs. So that is the amendment in 133C. And correspondingly, there is a consequential amendment, we can say, under 147 explanation 2. One clause has been inserted, clause CA, which provides that where assessing officer is having, on the basis of this information which he receives from the principal DGIT or DGIT, when he notices that return is not furnished and income is above basic exemption limit, or return is furnished but the income is understated, or there is an excessive loss or deduction or relief which you have claimed. In such a situation, again, it will be a deeming fiction, which you have seen earlier. There will be a deeming fiction and the income will be deemed to have escaped assessment. This is one amendment which has come from Finance Act 2016, a comparatively newer amendment, and therefore one has to be very clear about this position. Then explanation 3, which is also very relevant, in fact. Explanation 3 says, many times these questions are asked by many chartered accountants also, who says that once a person has made a reassessment, once the reassessment is open, whether the assessing officer is having the power only to confine that particular issue on which he has reopened the assessment, or he can also make some other additions. This is a very common question which are asked, in spite of this explanation 3 being very categorically clear. This question keeps on being repeated at various forums. So explanation 3 is the answer to this. it provides very clearly that uh, this has been in fact inserted by Finance Act 2009 with retrospective effect from 1/4/1989. Of course, though this was a retrospective amendment, prior to that, members will recall that there was a decision of Supreme Court in Sun Engineering. In Sun Engineering's case, Supreme Court was having this concern where the Supreme Court was saying that yes, once the assessment is open, he is having the power to make other additions also. Not necessarily that he has to confine only to particular issues on which the reassessment is open. He can make the reassessment for other issues also. This was the decision of Supreme Court. Thereafter, in spite of the Supreme Court decision, there was a view which was prevalent that no, the amendment, the Supreme Court interpretation is still possible to be interpreted in different manner. And there were some views which were expressed that yes, now it will be still possible for the assessee to contend that only those issues which are for which the reassessment is open will be subjected to reassessment. Thereafter, in Finance number 28/2009, this was an amendment which was made with retrospective effect right from 1st April 1989. And this amendment provides very clearly now that once an assessment is validly reopened and any other income which has escaped assessment which can be covered. Only condition is that it should have come to his notice of the AO. Subsequently, in the course of that reassessment proceedings, he can make the addition in respect of that also. So now it's a situation where, say, for example, your reassessment is open on the Hawala dealers. The very common example which we take. Say, for example, the reassessment is happening on the reassessment is open on the reason that there was a purchase from the suspicious dealers. And during the course of the reassessment, the AO also observes that there are some loans which are not in a position, which the assessee is not in a position to explain. And therefore, Section 68 is triggered. So he can definitely make the addition for both of them. There is no restriction that he has to confine only to the purchase of Hawala dealers. He can travel beyond that and make the addition for the other issue also. Not only one, there can be many issues which can be added. So this is the position under the explanation 3. But now, this any other income. Now this is the question which also again affects many times. And here we have some division of views of two different courts. A situation may emerge that, say, for example, your reassessment is open on one particular issue. Say again, going to our example of Hawala dealer. Now, during the course of the reassessment proceedings, the assessee is able to explain to the AO that my purchase from Hawala dealer is not there actually. The information which you receive from sales tax department or whatever, for whatever good reason, he is able to explain to the AO that there is no addition which can be made in this respect of Hawala dealer. There cannot be any addition. He explains all the things with the documentary evidence and he is able to avoid that addition in respect of Hawala dealer. But the AO during the course of his assessment, he comes across the Section 68. Taking our example further, the AO comes to a situation where he is able to identify that yes, there are some loans which are not explained, proper loan confirmations are not there, or the person is not having the capacity to pay to the capacity to lend the money to the borrower, etc. He makes the addition for that. Because now in the earlier slide we have seen in explanation 3 that he is in a position, he is allowed to make the addition in respect of all the issues. Therefore, the AO makes the addition for the other issue which is not the reason recorded. In such a situation, a question comes up whether he will be eligible to do that, whether it is permitted for the AO to make an addition which is not a part of the reasons recorded, but still emerging during the course of the reassessment. And there we have a complete division of view of two different school of thoughts. One of Bombay High Court, primarily the first decision which was there in this context was maybe from Bombay High Court in Jet Airways case, 331 IDR 236. Of course, that has been later on followed by Delhi High Court also and Gujarat High Court also. And the other contra view is of the Punjab and Haryana High Court. So what Bombay High Court said in Jet Airways, Bombay High Court said that looking at the language of explanation 3, he is having, let us go to the slide earlier. Yeah. It says once an assessment is validly opened and any other income which has escaped assessment and which comes to the notice of the AO subsequently in the course of the assessment, he can also bring that to the text. So the Bombay High Court says that only if the first edition for which the reasons have been recorded, if that is made, then and only then the AO is having the power to travel further and make addition for any other issue. But suppose, for example, the first issue does not survive, the reassessment, the reasons for which you have recorded, that issue does not survive at all. Then in such a situation, you don't have the power to go beyond that and make addition for issue which is not a part of your reasons. And therefore, your reassessment will have to be stopped there. You cannot travel further and you cannot make any further addition. That is what the Bombay High Court said. Delhi High Court and Gujarat High Court of course followed, but Punjab Haryana High Court in Majendra Khan's case said that no, in such a situation also, even if the primary addition is not made, let us understand it as a primary addition and secondary addition for easy understanding. So these two high courts, Punjab Haryana as well as Karnataka, they said that even if the primary addition is not made, the AO is having the power by virtue of expansion 3 to travel to the secondary addition. He can make definitely the secondary addition. Every entire proceeding is open and he can do that. So this was the whole issue which has happened about this. No, yeah. The problem is about the language of the section explanation 3, and also the section A says he can and also make the addition in respect of the addition of the issues which are emerging out during the course of the reassessment proceedings. So there, the Bombay High Court said that it is a disjunctive word and is there, so both are cumulative condition. Whereas the Punjab Haryana High Court said it's a disjunctive. It is dividing. It is not conjunctive. It is disjunctive. So this is the whole interpretation of this word and also in the explanation 3, and therefore these are the two views. Now coming to which is the more appropriate view. Now as an assessee you might feel that yes, Bombay High Court view is correct, and therefore you will always like to follow Bombay High Court. Those who are in Bombay definitely are having a better sense to argue that yes, Bombay High Court decision should prevail. But even otherwise, even if on merit also, if we see, it seems that the Bombay High Court decision and the Delhi High Court decisions are more appropriate, more relevant, and the Punjab and Haryana High Court probably is not correct in saying that though the first edition is not made, the second should be made. Why? Not because it is beneficial to the assessee, but the reason is that let us look at the basic provisions of the Income Tax Act. Let us look at the basic purpose of reassessment. Now, if going ahead, we'll see that the reasons are the first and foremost thing. Reasons are the most important thing for any reassessment proceedings to survive. It has to stand or fall on the reasons. Now, consider a case where the reassessment is the reason is recorded X. That X does not survive at all. Then, in such a situation, logically, because the reasons are failing, everything else should fail. Nothing should go further. That is the more sensible view than saying that no, even if the reasons are not valid, I will be able to make them. What will happen? What irony will come up? Say, for example, assessee officer wants to make some addition. He wants to make some harassment to the assessee. These are ultimately arbitrary powers, and therefore there has to be some checks and balances. If he wants to make some arbitrary addition, some sort of harassment he wants to do, he will just issue the notice saying any whatever XYZ reason, and thereafter he will say that yes, okay, these reasons are not serving, no problem. Let me travel to something else, and then he will be having the power to make fishing or roving inquiry, as we say, which is not permitted under 148. Therefore, it seems more sensible that the powers of the AO are restricted to the reasons which are recorded, and not if the reasons are failing, nothing should be permitted. Therefore, I will feel that the Bombay High Court is a correct decision, and Punjab Haryana may not be the correct decision, and of course the Karnataka in the case of Govind Raju. Of course, it is not free from doubt, and one will have to live with that. Probably, maybe someday Supreme Court will decide on this, and therefore there will be some further developments in this area. Now that therefore a counter question, incidental question which comes up along with this is that in such a situation, say for example, the example which we were dealing earlier, Hawala dealer versus section 68 edition. Say for example, during the course of this reassessment proceeding, if the AO finds out that there are some suspicious dealer, and he is not suspicious dealer is the first issue which he takes up. He is not able to make any addition in respect of that, but he finds out during this course of assessment that there is some 68 edition also which can be made. Now in such a situation, whether the AO is having the power to make one more 148 and say that now my reasons are this. I am not saying that about my earlier notice, let my earlier notice fail, no problem, but I am making one more notice, I am issuing one more notice, and I am in this notice I am making the reasons that there is a addition under section 68 which has not been made, and therefore the income has escaped assessment. Can he do that? And therefore that is a question, because that information is now available to him. Can he do that addition? So we have got this decision of Kunal Organics, of course, which decision ultimately held that ultimately he cannot do it, but they have said that even in such a situation he is having the power to issue a fresh 148 as long as it is within the parameters, as long as it is within the time provided under 149. He can certainly issue one more 148 for the same assessment year. Though his first notice has failed, he can definitely make one more reassessment notice. But only thing is that there has to be a finding that there is a reassessment in that also. In the new notice which he issues, there also there should be some finding to the effect that yes, the income has escaped assessment. In the decision of this Kunal Organics, that finding was not there. But the court, while giving this decision, has observed that yes, as long as it is within the parameters or whether within the time, you can certainly issue one more 148 for the same assessment year. So that is possible. Multiple reassessment is also possible. One is to bear in mind. Yeah. Thank you. 1 second. Yeah. So this is primarily 147 provisions which you see. Now let us look at the other provisions, section 148, 149, etc. So 148 provides that for the notice of assessment, one is to issue the notice. The assessing officer is duty bound to issue the notice first of all if he wants to make a reassessment under section 147. So 148 provides that before making a reassessment, assessing officer has to serve a notice to the assessee. That return which you file will be treated as a return on par with return filed under 139. And 148(2), subsection 2 of 148, which is very relevant, which provides that before issuing the notice, the assessing officer is bound to record his reasons for the same. If he is not recording the reasons at all, or if the reasons recorded are not proper, then 148(2) comes to your rescue, and then in such a situation, notice under 148 can be quashed. 148(1) that can be quashed, that can be challenged before High Court. So this is the very, very important principle that before issuing the notice, the assessing officer should record his reasons. 149 provides for time limits. It says that notice has to be issued within these limits. 4 years in normal case, 6 years if it is the income escaping likely to escape is more than 1 lakh, and 16 years time if it is in respect of a foreign asset, and within 6 years in respect of non-resident agent, etc. And provisions of 151 will of course have to be taken care of. It provides that subject to section 151, this limit will be applicable. Now here there is some controversy about, there is some conflict between section 148 and 149, because 148 provides for 148 says if you can mark the red letter in the screen. I don't know whether the participants from there are able to see the red letter, but in any case, the 148 provides that before making assessment, the assessing officer is to serve a notice, and 148 it has to be issued. So the problem comes up that whether this is notice has to be served within that time limit or notice has to be issued within that time limit. This is the whole problem which many times many chartered accountants are facing. These questions keep on coming to many a time, that once the notice, say for notice, for example, notice is issued on 31st March and it is served on the assessee on 3rd April, whether that is a valid service, whether this is within the parameters, whether this is valid service or not, that question keeps on coming many times. So one is to understand difference between serve and issued, and therefore when one looks at the section 149, the time limit is for issue. It is not for service. Service is provided in section 148. 148 says that the notice has to be served. That is correct. But at the same time, the time limit is provided for issue of notice. And therefore, if the notice is issued on 31st March, signed on 31st March, of course, after taking proper approvals from the seniors as required under section 151, etc. If it is done and it is served after 2-3 days time, then there is a presumption that that notice is a valid notice. It has been issued as required under section 149, and that therefore time limit have been respected, properly adhered to. Therefore, you cannot turn back and say that no, this notice is out of time. It has been served. Yes, it has been served under 148 also. So therefore, in such a situation, it will be a valid notice. Only point is that if it is a very long time, say for example, 31st March is the date on which the notice is issued, and it is served on the assessee on say 20th April or 25th of April, then there is a presumption. Then one can probably argue that yes, in such a situation, it seems that the notice is backdated or something like that. But otherwise, if it is issued, served within 2-3 days, then normally it will not be a good case to argue that the notice is invalid. And therefore, one is to try to save yourself on merits rather than trying to defend on this technical aspect. So this is the difference between issue versus service. 148 and 149. One has to read together, and therefore one understands that yes, time limit is for issue, not for service of notice. Then section 150. 150 provides for appeal in pursuance of reassessment in pursuance of appeal, revision or reference, etc. It says that suppose say for example the assessment of 2014-15 you have taken in appeal, and during the course of the appeal of 14-15 the CIT appeal observes that yes, this income which you are saying that will not be taxable in 14-15 but pertains to assessment at 12-13 or 10-11, and therefore the CIT appeal says that yes, now therefore this should be taken reassessed in that year, and therefore in pursuance of that direction, the officer issues the notice. Then section 150 provides that finding given in any order of any appeal, revision or reference, in such a situation, notice under section 148 can be issued at any time. So it primarily overrides the earlier section 149, and it says that in such a situation, 149 limit will not be applicable, but you can issue at any time. There is no restriction to that effect. Only exception which is there, that when the original order was passed, say for example, your original order of 1415 is passed on, say for example, 31st of December. Now, if your income pertains to assessment year 8-9, say for example, so on the date on which the original order is passed, on that day itself, 31st of December 2016, assessment for 8-9 was not possible. It has already, the time limit of 149 has elapsed, for 6 years have already passed, say for example. In such a situation, you cannot travel back to 8-9. So that restriction is there. This 150 expands the scope of 149, but not to infinity. It restricts the scope to that extent that if on the date on which the order which you are challenging in appeal, if that on that particular day the reassessment could not have been taken for that particular year, then in such a situation, no, then there will be a break, then there will be an end to the story, because ultimately everything has to have an end. But otherwise, if it is within the time, on you have to see the time limit on the date on which the original order is passed, and if it is possible, then it will be, this time limit of 149 will not be applicable. This is the provision of section 150, which is very relevant. So in a given situation, it may so happen that 150 will be able to give some extension of time to the department. So one has to be very careful about 150 provision. Then section 152, we'll deal with 151 maybe in the next slide. But in the meantime, let us look at section 152. Section 152 says that the tax will be as per the rates prescribed in that year. So for example, assessment for 10-11 is happening, then the rate will be of 10-11 or whatever applicable rate of that year. And the total income will have to be added together, and it will be the rates at which it would have been chargeable if there was no escapement. That is the 152.1. 152.2, section 152.2 is also very, very relevant, and in a given situation it can be a boon to the assessee if you can use it in the right manner. This is a provision which is not known to many chartered accountants, so therefore let us understand that. Section 152.2 provides that consider a situation where you already been assessed and your assessment is actually made at a higher amount, which is actually not legal, but for whatever reason you have not filed an appeal or you have not gone for any revision under 264 against that order. Say for example, in your assessment of 13-14, there is an addition which has been made of say 5 lakh rupees. You believe that that addition is not correct, and you have got the documentary evidence, the support to prove. If you would have contested in appeal, you would have certainly been able to strike it down that this is not a valid addition of 5 lakh rupees. Now a reassessment notice comes, and that reassessment notice says for the same year 13-14, that reassessment notice says that the assessing officer is having the belief that 2 lakh rupees of income has escaped assessment. Say for example, your addition is already made for 5 lakh rupees, which is not justified, but you have not, with a view to buy peace, you have not preferred any appeal or any revision under 264 against that particular addition. You have accepted the addition, you paid the tax and forget it. Now in such a situation, therefore 152.2 provides that if you have been already assessed at a higher amount, then you can demonstrate to the assessing officer that look here, I have already been assessed, I have already been suffering with this addition, which is actually not justified, and still you have made that addition, and I have not filed any appeal. Therefore, I have lost my right of any further remedy. Therefore, you don't now make the reassessment. You may please drop my reassessment. In such a situation, the assessing officer is bound to drop the reassessment, provided these 2-3 conditions are there, that there should not be any appeal or revision pending. That is one thing. Second thing is that you should be able to demonstrate with evidence that yes, this is a addition which has been resulted in my hand, in fact more than what you are now proposing. Then in such a situation, the assessing officer will be dropping the reassessment proceedings. Of course, it is very difficult to demonstrate because at times the assessing officer may not agree with your view, and there will be some difficulties. But if in a given case, if you are able to do it, then you can entirely avoid the reassessment proceedings and a lot of other issues, which lot of fallout of the reassessment proceedings. If you can use it, this 152 in the correct manner, you will be able to save yourself to that extent. 151 provides for time limit for sanction for the senior officers, sanctioned by the senior officer. This provision is also changed with effect from 1st June 15. Earlier it was a different provision and now it is different. So if at all you are contesting a matter where the 148 has been issued prior to 1st June 15, then this is the table which you have to be careful. Otherwise, the notices which are issued after 1st June 15, there is a different time limit, different sanctions, etc. So this is the table which explains what type of sanction is required. Say for example, original assessment is is a 143, so regular assessment, and it is done by, say for example, ITO. Then within 4 years, he requires permission from AC or DC, and beyond 4 years, he requires permission from CIT or CCIT. And in a case where it is done by ACIT, then within 4 years no permission is required. Beyond 4 years, again the same permission is there. Similarly is the case of the 143 one. The table is self-explanatory. One can easily understand from this table. But this is applicable if it is prior to 1st June 15. The notice of 148 is issued prior to 1st June 15. Then this is the time limit which has been provided. Post 1st June 15, there was an amendment by the Finance Act 2015, and this is the position after 1st June 15. So as of today, let us try to understand today's position. In today's situation, the position is that 148 cannot be issued by AO after 4 years without approval of Principal Commissioner or Principal Chief Commissioner. This is the position. And within 4 years, AO can issue, but if the AO is below joint CIT level, then he has to take approval of joint CIT. The approving authority need not issue the notice himself. That is also provided that the joint CIT or the principal CIT as may be applicable as per your case. He will only sanction the issue of notice. He will not himself issue the notice. That is not required. And original assessment, maybe scrutiny assessment or a summary assessment, whatever, is not relevant now, in fact, after this 1st June 15. So this is the position, and one will have to see whether this is applicable, the prior sanction, which is a mandatory provision, has been obtained or not. Many a times it is possible that, just on the 151 provision, if the prior sanction is not obtained as may be prescribed, you can definitely argue before the appropriate authority, CIT appeals tribunals or High Court, and get your notice strike off. The entire assessment, which is based on the basis of a notice without proper sanction, may get quashed. So this is also very relevant. 151 provision, if it is violated, the assessee is having a very good chance to get the assessment strike off on this very principle. And also, the sanction of notice. Now, the sanction of notice, they are provided as under 151, which we have seen in the earlier 2 slides. So permission from one authority cannot be substituted by permission from another authority. This is very important. This is the case of Delhi High Court in SPL Siddharth's case, 345 IDR 223, where in fact, as per the scheme of section 151, as per the provision of 151, the sanction was required from Joint Commissioner of Income Tax. But the assessing officer obtained the permission from Commissioner instead of Joint Commissioner. Now, Commissioner is a higher authority per se from Joint Commissioner. He obtained the permission from Commissioner instead of Joint Commissioner. So now, in that situation, the assessee said that no, he has not obtained the permission under section 151 as was required under section 151, and therefore this is not a valid notice under 148. The department said that Joint Commissioner is a lower authority and Commissioner is a higher authority. They have got even further higher person sanction, and therefore it should be allowed. And there the Delhi High Court said that no, whatever the section provides, you have to go by that only. Even if the Commissioner is a higher authority, sanction has to be from Joint Commissioner because it is required under 151, and therefore you cannot go to Commissioner and take the sanction. This is not permitted. One has to take this note. Also, there is one Mumbai tribunal decision on this. I am not able to exactly lay down my hand. I could not do that. But there is a Mumbai tribunal decision on the same facts which has said that no, even if the permission from higher authority is taken, is not permitted. You have to strictly abide by section 151 and cannot have any leeway there. Also, one has to be very clear that this sanction, which the higher authorities are supposed to give, is to be after application of mind. It shouldn't be a mechanical sort of approval. Many times it happens that the 31st March, the reasons are recorded on 30th of March. They are sent to the officer also on the 30th of March, higher authority, and on the same day he sanctions. He says, "I confirm." He just writes 2 words, "I confirm," and I sanction, and then he passes on the approval in that fashion. In such a situation, it is not a valid sanction, and there can be some difficulty. The assessee can very well say that this is no application of mine, and therefore it is not a valid sanction. Just to refer, there is one dismissal in fact of SLP in this S. Goenka Lime and Chemicals 2016 decision of Supreme Court, where Supreme Court in fact dismissed an SLP of Madras MP High Court, which said that there was a sanction which was given without application of mine. It was given on the same day just by saying that I hereby sanction, without giving any reasons, without making why this sanction is given, etc. In such a situation, this MP High Court in fact did not permit the department to make the reassessment, and the Supreme Court has dismissed the department's SLP and said that no, this is a valid, this SLP is dismissed, and therefore, of course, dismissal of SLP may not amount to the Supreme Court view, but just to make a note of the provision that MP High Court has already said that in the SSC's case, and therefore it became a difficulty. Just 1 second, there is some technical problem. Okay. So with that, let us note down these decisions and let us move further. Let us understand one point, that 151 is a very, very relevant section, and in a given situation, it can come to the rescue of the assessee. One has to be very well aware of that. 153, of course, provide for time limit for assessment, which are there, which says that 147 order, which has been after 148 is issued, the order under section 147 has to be passed within 9 months from the end of the financial year in which the notice is served. Here again, before few slides, we have seen the difference between service of notice and issue of notice. Now here also, the limit is with reference to the notice, service of the notice. So say for example, in the example which you have taken that time, so 31st March 17, say for example, the notice is issued, but it is served on 3rd April. But for deciding the time limit for completion of reassessment, you will have to go by the date of service. And for 3rd April 2017 in our example, there will be end of financial year will be 31st March 2018, and 9 months from that. So 31st December 2018 will be the date on which the reassessment has to be completed. Though it is issued on 31st March 2017, but serviced on 3rd April 2017. Had it been served on 31st March 2017, then the reassessment would have to be completed by 31st of December 2017. But just by service being late by 2 or 3 days, you can have 1 more year for the entire reassessment, and therefore, whenever the notices are to be seen, the time limit for completion has to be seen with reference to service of 148 notice and not the issue. Also, there is an amendment, of course, which says now that for notice issued after 1st April 2019, which is yet to come, the period will be enhanced by further 3 months. So earlier, in fact, prior to 2016, the period was 12 months. 2016 Act brought it down to 2015 Act brought it down to 16 Act brought it down to 9 months, and now again it has been increased by 3 months. So it will be 12 months from the end of the financial year in which the 148 notice has been issued. Then again, it is saying that if during the assessment a reference is made to the transfer pricing officer, then in such a situation, the limit which has been provided under both the position after 1419 or before 1419, in both the situation, the notice will be, the time limit will be enhanced by 12 months. If it is a reference, there is a reference given to the TPO during the course of the assessment. So in such a situation, 12 months further extension. So maybe 9 months will become 21 months, and 12 months after 1419 will become 24 months. So that will be the time limit. So those were the provisions, basically the first P which we wanted to deal with. So provisions dealing with the assessment. Now let us look at some of the fundamental principles. The principles are also very relevant. Let us look at those. First and foremost is reason to believe. As we have seen, section 147 provides that if the assessing officer has reason to believe that the income has escaped assessment, he can make assessment or reassessment, etc. during under section 147. So first and foremost thing is that there should be a reason to believe. There cannot be just a rumor on the basis of which he wants to make an addition. Somebody saying that somebody is making a big money and you want to make an addition or you want to make a reassessment. No, that is not valid. You have to have a solid reason for making a reassessment. The first question is why you want to make a reassessment. That is always there. So belief should be there, but it should not be a loose belief, just a hear and say talk. It has to be a belief which has been based on the reasons. The reason to believe versus reason to suspect, that is also one discussion. So one has to be very clear that yes, this is my belief and not my suspicion merely. And the assessing officer is not allowed to make an addition only on the basis of suspicion. Not addition, of course, in fact. You cannot make the reassessment only on the basis of suspicion. There has to be a strong belief, then only he can do that. Useful decision in the case of Shivnath Singh's case, 82 ITR 147, where in fact in this case there was a rumor in the market that this person has acquired the shares of one company, Hotel Oberoi in Mumbai, and it has been acquired at a very high price, and therefore the assessing officer wanted to make a reassessment in his end. The Supreme Court matter went up to Supreme Court. Supreme Court said no. In such a situation, just there is no reason, valid reason. It is just a suspicion on your part that you heard somebody saying something, and therefore you cannot make an addition on the basis of such a situation. A somewhat similar situation in the case of Coronation Agro in Bombay High Court recently in November 16. This year has come, where this is about the client code modification, which has been also a big issue nowadays, about client code modification done by the some of the brokers in BSE and NSE. So here in Coronation Agro, of course, there was a writ petition where the assessee has gone to the High Court and asked for quashing the order. Bombay High Court quashed the order, saying that quashed the 148 notice, in fact, saying that you cannot make the addition you cannot proceed for reassessment rather merely on the basis of some loose information, some suspicion. Coronation Agro, Bombay High Court decision is there. Of course, reason may not be conclusive. At this stage, when 148 is issued, there has to be reason for belief, that is correct. But there is also a difference between reason and conclusive evidence. So at the stage of issue of 148, there is no requirement that you should have conclusive proof. You should have first apparent prima facie reason to believe. But there is no need to have a conclusive evidence to the effect that the income has escaped assessment. That can come during the course of your assessment. Once you start making the assessment, you will be able to gather the document, and on the basis of that, you will be able to finally conclude whether the addition is required or not required. Those questions come secondary. But your primary entry to the 148 is permitted if you have got reasonable belief that yes, this is a income which has been escaping assessment. So Raymond Woolen Mills is a decision which is very classical decision of Supreme Court. Also the Rajesh Jhaveri stockbrokers, where this proposition has been canvassed by the Supreme Court, which says that you will not need to have a conclusive evidence at the stage of reopening, at the stage of issue of 148. Later on, of course, before making the addition, you have to have the conclusive evidence in your hand, but you can certainly have a reasonable belief, and if your belief is supported by reasons, then you can proceed with the reassessment. There is nothing wrong, nothing to stop the assessing officer to do that. So this is the difference between the facts of Shivnath Singh's case and Raymond Woolen case. If one understands the difference between the two, one can probably see where your case exactly lies, and accordingly you can challenge the 148. Then there is one more very important concept which is about tangible material. It is said that reassessment is actually something which you are doing again. You are bothering the person again. Now what do you have? Do you have something in your hand to some material, some information in your hand to say that yes, income has escaped assessment? Your belief cannot be based in loose manner. We have seen that earlier. So this concept of tangible material is very important. So it says that before proceeding for reassessment, you have to have tangible material, not only material. That material should be a tangible material to come to a conclusion that yes, the assessment, the income has escaped assessment. It is a sine qua non, as the Bombay High Court said in Aventis Pharma's case, where this is a most important thing. If you don't have that, you cannot proceed further. Now, this also is a discussion whether tangible material is required under 143(1) situation also. Say, for example, the original assessment is not a scrutiny assessment, it's merely a 143(1). Whether the assessing officer is having the power to make the reassessment in absence of tangible material, without any tangible material in his hand, can he go ahead and make reassessment saying that original assessment is not a scrutiny assessment, therefore I don't have anything on my hand, therefore I don't need to do anything, I can straight away go for 143 or 147. That is also not permitted, as canvassed by many high courts, Delhi High Court, also Bombay High Court, also Mumbai Tribunal in Telko Dadaji, Dhabji, etc. And also Prashant Joshi's case, where Bombay High Court in fact says that incorrect assumption of law is not a valid reason. These are the decisions which have said so. In fact, Prashant Joshi's case was a case where the Bombay High Court also dealt with one more proposition, saying that the belief which is coming, the reason to believe, the reason which you are recording, should be on the basis of a valid law. If nobody can come to a conclusion, a reasonable person cannot come to a conclusion from the case that yes, there is an income escapement. There was a partner retiring there, and that partner has got some money from the firm, from the firm in which he retired. The assessing officer tried to text that, try to make the reassessment, saying that there is an income which has escaped assessment, and Bombay High Court said that no, there is Supreme Court decision in various other cases, which has already held the view that on retirement of a partner there is no transfer, and therefore a reasonable person only can come to a conclusion that no, there is no income. But still, if you want to assume by incorrect assumption of law, if you want to make the 148, that is not permitted. That is what the Bombay High Court said. There is one contra decision, of course, of Delhi High Court in 384 ITR, Indu Lalta Rangwala, where it is said that no, in 143, one situation, there is no need to have a tangible material. But I feel that decision is a one-off decision, may not be that relevant, because later on, after that decision of Indu Rangwala's case, there is one more decision I could not mention here, I just missed out. But there is one more decision of Delhi High Court which has again said that no, tangible material is a very much essential requirement even in 143(1) situation. So therefore, in that case, it will not be a 141, 147 will not be permitted unless and until you have some tangible material. Unless department is having some tangible material in its hands, it cannot make the reassessment. That is what the High Courts and Tribunal, Mumbai Tribunal third bench also, this Telko Dadaji Dhagji, which is available on ITAT online, is a very good decision, very well reasoned decision. One can refer to that also. Also, disallowance of expense in subsequent years. Say, for example, that particular expenditure, that same type of expenditure is there in all the years, and in later years there has been disallowance of that particular expenditure. Then it will be certainly a tangible material, a fresh material which is available, which has been this has been accepted by the Bombay High Court in Rabo's case, and therefore, in such a situation, tangible material is there, and therefore it will be a valid reassessment. Recording of reasons, we have seen 148. So, as I said, why you want to make a reassessment? That is the most and foremost question before you proceed for reassessment. So, 148(2) says that the reasons has to be recorded prior to issue of notice. It cannot be subsequent to the issue of notice. That is, first the procedure is laid down. First you have to record the reasons, then get the sanction, and then only you can issue the notice. You cannot alter the procedure. The steps cannot be altered. You have to first have reasons recorded. Reasons should be recorded, and then only you can do that. It cannot be recorded between the date of issue and date of service. So you issue the notice, but you don't serve. You keep it with you, and then you record the reasons. That is not also permitted. In Raju's case, this Gujarat High Court has taken this view. That it is not permitted. Also, reasons has to be on the basis of position prevalent on the date of issue of reasons. This is also very relevant. This Bombay High Court decision, Godrej Industries, in fact, will explain the case. What has happened in this case that there was a MAT addition which the assessing officer wanted to make under 147. He wanted to proceed for 147 for the MAT addition, and MAT addition was in respect of the diminution in the value of asset. There was an amendment in MAT, if the members recall, 115 JB was amended to provide that diminution in the value of asset as debited to the profit and loss account will be subjected to MAT. The officer wanted to make reassessment for that particular issue, but when he issued a notice under section 148, that amendment was not there. Though it was a retrospective amendment, that amendment was not there when the officer issued the notice. Later on, that amendment came, and therefore he tried to put up that argument also, saying that now there is an amendment, and therefore my action is justified. The Bombay High Court in Godrej Industries case said that no, it is not permitted. Reason, the position of law has to be seen on the date on which you issue this, record your reasons, and not on the date on any subsequent date. There may be some changes later on, but what has to be seen, the position as on the date of issue of notice under section 148, nothing more than that. So that is one very important proposition one has to note. Also, very important proposition, a settled position sort of, but still many a times department tries to protect itself in this, and therefore one has to understand that recorded reasons, once you record a reason, once the AO records the reasons, it is a sacrosanct. It cannot be altered. One paragraph, one comma, one full stop, nothing can be changed. It becomes freezed, and therefore recorded reasons cannot be substituted, amended, supplemented by way of affidavits, etc., or altered. That those things are not possible at all, because the High Courts have said that reasons are the first and foremost step towards the reassessment. If your reasons are not appropriate, you don't have license to go further. You have to stop there. Sorry, you cannot do anything more than that. And therefore, the High Courts have consistently held that there cannot be any alteration of even one word in the reasons, and therefore you have to confine yourself to the reasons. The classic decision of Hindustan Lever versus RB Vadkar, 268 ITR 332 Bombay High Court. This was first probably pronounced, and thereafter consistently Bombay High Court also, Gujarat High Court also has been holding that right as long as it up to Nirmal Bang Securities in 382 ITR. It has been held that your reasons cannot be altered. Therefore, it is very much necessary for everybody, whenever there is a reassessment, you first seek the reasons. If you seek the reasons, you get the copy of the reasons, you will be able to identify if there is anything to be challenged, you can challenge that. And thereafter, the department does not have any power to change the reasons at all. Therefore, this is very important. One is to be very clear about this. You can be very sure that if the reasons are try to be altered later on, then you will be able to save your client out of the reassessment. Reasons shall be self-explanatory. Again, the Hindustan Lever's decision said this. It cannot be vague. See, the fundamental principle of reassessment is that there has to be equity. Because if you put some reasons which are not very clear, you just mention very loose things here and there, then the assessee is not in a position to defend himself. And therefore, with a view to protect the interest of the assessee, the high courts have consistently held that the reason has to be very clear. It has to be self-explanatory. It cannot be loose language. So that is very important. Also, if the reasons are, if the reassessment is beyond 4 years, then your reason should mention that there is a failure on the part of the assessee to make full and true disclosure. We have seen in Proviso 1, the first proviso to section 147, which said that the reassessment cannot be made unless and until there is a failure on the part of the assessee to make full and true disclosure. So the reasons should also mention that there is a failure. Not only that, the reason should mention the manner why you are saying that there is a failure. What type of information is not given. Exactly pinpoint that particular point. You cannot be loose again. You have to be very clear that yes, this is the point which was required to be disclosed by the assessee. He has not disclosed, and therefore now beyond 4 years our reassessment is valid. Otherwise, if it is a loose, it is not permitted. Again, this same 268 ITR and also 382 ITR, both the cases the Bombay High Court has taken this. We've also seen that beyond 4 years, the time limits provide that if it is more than 1 lakh rupees, the income escaping is more than 1 lakh rupees, then and only then there can be a reassessment beyond 4 years, not otherwise. So the reason should also mention that there is an income which is likely to be likely to have escaped is more than 1 lakh. Some reference about Allahabad High Court in 85 CCH, Mahesh Kumar Gupta's case, where it has been said that if the reason does not mention that it is likely to be more than 1 lakh, then in that count also the reasons will fail and the assessee will be able to save himself from the reassessment. Also, successor AO cannot issue notice on the reasons recorded by predecessor AO. The transfers keep on happening in the department. So if there is Mr. A who is the assessing officer today, he records the reason and he is getting transferred. He got transferred. He does not issue the notice by the time, but he gets transferred. Mr. B comes in his place and he issues the notice on the basis of the reasons recorded by Mr. A. In such a situation, it is the Gujarat High Court view, and there are many other decisions on the subject which says that in such a situation the notice is not a valid notice. The reassessment cannot be proceeded. Of course, if the earlier officer, Mr. A, in our example, has already recorded reasons, also issued the notice under section 148, then definitely there is no bar on the next officer who comes in, Mr. B. He can assessment thereafter because it is already initiated by 148, which has been issued by the earlier AO. The only point is that when the AO recording reasons and the AO issuing 148 is different, that is not permitted. Otherwise, once the person who has recorded reasons, he himself issues the notice also, thereafter the proceeding can be further carried forward by any of the any subsequent incumbent to that office. So that is the difference one has to understand. Many a time this is also observed, audit objections, because 148 happens so frequently on audit objections also. Many a times the department officer calls us, there is an audit objection and therefore I am proceeding for the reassessment in your case. Whether it is permitted, that is the big question, because many reassessments are happening on this. So let us understand the fundamental principles. Internal auditor or audit objection cannot perform the function of judicial supervision of the AO. He is not the supervisor authority. He is just an audit department. He is a peers of that person. He is not the supervising authority. Further, he cannot direct that you have to interpret the law in this particular manner only. So interpretation of auditor is not the binding on AO, on the AO. There may be difference in view. Auditor may be having different view. Audit officer and the assessing officer may be having some different view about a particular issue. But that does not permit the AO to. That does not permit the internal, the audit team to put their view on enforce their view on the assessing officer, and the assessing officer is not required to follow the directives, so to say, of the internal audit team. However, of course, at the same time, internal auditor can draw the attention if there is an existence of law. there is one particular provision, say for example, section 14A and rule 8D is there. And in a particular given case, the assessing officer is missed out to invoke rule 8D where actually it is supposed to be invoked. In such a situation, yes, the audit team can draw the attention of the AO, but the AO just on the basis of the audit team's observation cannot make the reassessment. He has to apply his own mind. He has to come to a conclusion that yes, on the basis of the objection from audit team, I have come to a conclusion. I have again interpreted the, I have gone through the file and I find that yes, there is escapement of income. Then okay. So there is a difference between interpretation of law versus communication of law. Communication of law by the audit team is permitted, but interpretation of the same provision by two different authorities is not permitted. If there are factual inaccuracies, of course, then definitely the internal audit team is having the right to draw the attention of the AO, and AO is thereafter supposed to apply his own mind and then proceed with the reassessment, not otherwise. These are the classic decisions of Supreme Court which deals with two different type of situation. And in a given situation, when you are facing with this internal audit objection, you read these decisions and try to understand where you are fitting exactly. Say for example, in the case of Indian Eastern Newspaper Society, there was a conference hall by this society. It was being leased out, and the was assessed as the income was assessed as business income. The audit party had a view that this income should be assessed as an income from house property or income from other sources rather, not as an income from business, and therefore they said that this should be assessed in this particular manner. The AO made reassessment on the basis of the audit objection, and in such a situation the Supreme Court said no, it is just a different view which is being expressed by the audit team, and in such a situation the audit's view is not the binding view. You cannot proceed on the reassessment on the basis of this. As against that, we said that the audit team is certainly having the right to communicate the correct law to the AO. So that you can refer to this PVSBD decision 237 ITR, where it was a deduction under section 80G which was claimed by this assessee, and the donation was given to a trust whose validity of 80G has already expired prior to the donation being given. In such a situation, the audit objection was there. The audit team found out that yes, this trust is no more having the 80G exemption, and still the assessee is claiming the 80G exemption. It communicated it to the assessing officer, and the assessing officer made the reassessment. Then the Supreme Court permitted the reassessment. Supreme Court said that yes, it is merely a communication of the correct position, and where there is no view to be expressed, there is no legal interpretation, etc. Therefore, that should be permitted. Recently, in March 2017, of course, this is a decision under the Jharkhand law, Jharkhand taxation, the local taxation law, but it is a Supreme Court decision where again the similar view has been expressed that audit objection, merely audit objection, Larsen and Toubro's case, merely on the basis of audit objection, there cannot be a reassessment. Of course, those provisions are of the state of Jharkhand, Jharkhand state tax provision, but they are equally applicable to section 147. They are almost on the same presumption. This is also a valid decision which is available of Supreme Court, and therefore one can take a recourse to that decision also in a given situation. What is relevant factor now? So therefore, let us list down the factors. The thing is that if there is merely audit objection, just a mere audit objection, and on the basis of that, without applying mind further, he just blindly follows the audit objection and he makes the reassessment, that is completely not permitted. The list of decisions are given on for each of the point. It is completely not permitted. Bombay High Court, Gujarat High Court, everybody is saying that in such a situation it is not permitted. But an audit objection plus application of independent mind by the AO, yes, certainly permitted. 362 ITR 502 Gujarat High Court, NK Industries case, it is certainly permitted. After receiving audit objection, the AO has to apply his mind. And if he applies his mind, after applying his mind, he comes to a conclusion, yes, there is a re-escape, there is an income escaping assessment, then in such a situation, he is permitted to make a reassessment, not otherwise. So one of the possible interpretation versus only interpretation we already dealt with probably, and inconsistency of law versus facts also we have dealt with. This is one peculiar situation. Many a times, assessing officer himself says, when the audit objection comes from the audit team, the AO writes a note to them, the reply to them, in which he says that no, there is no mistake on the part of assessing officer. My part, while making the assessment, I have not made any error. I have followed this position. I have followed the law. This is the interpretation which I have taken, and therefore there is no mistake on my part in making the assessment. So he says that, but still he makes the reassessment. He starts with the reassessment. In such a situation, so AO disagrees with the audit objection, still proceeds with 148. It's certainly not permitted, and very correctly so, because it has to be the belief of the AO, not the audit team. The AO has to deal with the AO has to form a belief that there is a income escaping assessment. If he himself is saying that this is not a mistake, then he cannot turn back and again say that no, let me at least do 148. That is not permitted. Delhi High Court, Bombay High Court, and also Mumbai Tribunal is all on the same lines, which says that no, in such a situation there will be no reassessment permitted. Sun Pharmaceuticals case also, Delhi High Court was there, where CBDT instruction number 9, members may be aware there was a CBDT instruction number 9 regarding pharma industry, that they cannot give freebies to the doctors. There was a CBDT instruction to that effect on 7th November, on the basis of which the assessment was, on the basis of which the audit party said that no, you make a reassessment in this case because this is in violation of instruction number 9. There in that case, the AO in fact said that no, this is no mistake because it is not in accordance with law, but still is tried to make the 148 also. In such a situation, the Delhi High Court said that no, you cannot make a reassessment in that case. And further, the Delhi High Court said that the CBDT instruction is not the law ultimately. It is a instruction, a belief of the CBDT. That cannot govern the reassessment proceedings. And therefore, in such a situation, you will not be able to move further with the reassessment. Similarly, many a times this is a one more problem that senior officers dictate. Many a time the CIT says, "No, no, इसमें reassessment करना चाहिए आपको. Do the reassessment." So, in such a situation, whether just because CIT is saying something or just because the DVO says something, do you need to make a reassessment in the hands of the assessee? We have got few decisions which are very relevant. Supreme Court in Greenwald's case said that reassessment cannot be made on the direction of CIT. So my boss may be my boss, but not the ultimate boss. He will not be dictating me whether the reassessment is to be made or not. It has to be my belief, the AO's belief. If the AO believes that the boss is incorrect, he may not proceed with the reassessment. He cannot proceed. There has to be something coupled with that. If something coupled with the direction of CIT is there, then certainly he can. But mere instruction from the senior officer will not be sufficient to make a reassessment. We cannot make on the basis of DVO's report also, because DVO also at times there is a difference in the valuation. The DVO feels that the asset should be this much, and therefore there is a reassessment to that effect, the unexplained investment, etc. Or maybe 50C type of situation where he has received this much. In such a situation, also only on the basis of DVO's report, there cannot be a reassessment. We have got decisions to that effect. Supreme Court again in the Arya Constructions case, which say that DVO's report per se is not an information. AO has to again apply his mind on the information, and then he must form his belief thereon. He cannot do it otherwise. This was a case, one more case of Bombay High Court in Hemant Traders. There was a survey on this assessing, Hemant Traders 375 ITR 167. During the survey, nothing was found, nothing much was found. There was some minor inconsistency with the cash, some stock, some minor variation in cash stock, etc. Small variation, nothing much. But in that scenario, the no addition was made in the year of survey, the financial year of the survey. No disclosure was made by the assessing, nothing happened. But the assessing officer said that, okay, because there is a survey, it seems that definitely there will be something. So for the earlier years, he reopened the assessment and he tried to make a 148. The assessee went to the High Court with the writ, and the Bombay High Court in this case said, no, just because there is a survey, you cannot say that there is a reassessment required. You have to form the belief. Where is the belief that there is something more than the survey? Survey is just an action, it's okay, it's over. But you cannot say that just because there is a survey, you need to make a reassessment. That is not permitted. You have to form a belief that there is an income escaping assessment. There is no belief to that effect here, and therefore we will not permit the reassessment. That is the case of Bombay High Court in 2015 375 ITR. Then again, there is a change of opinion. Many a times this is also a big problem. The assessment is over, and the officer feels now that no, now I feel this is something different. This has to be interpreted in some different manner. Or maybe the same person takes the same different view, or maybe the officer is transferred, new officer comes up and he takes a different view. So, there also, of course, there is a clear cut no, it cannot be done. Reassessment is permitted, but review is certainly not allowed. It is just a change of opinion. The change of opinion does not permit reassessment. One is to very clearly understand. Mere change of opinion, either on law or facts, cannot be a reason to believe under 147. So review is not permitted. Reassessment is permitted. The classic decision of Supreme Court in Kelvinators case. Anytime when you are facing a situation of reassessment, you please read this and you will find out some good answer to your question. 320 ITR 561. The Supreme Court said that the powers of the AO are not arbitrary. There has to be a check and balance on that. The reassessment powers are not for review, and it is not in the review is not permitted in the garb of reassessment. And change of opinion is inbuilt to check the abuse of power, which is otherwise the power are abusive. It's possible to be abused in such a manner. Therefore, they have said that there is an inbuilt provision, and therefore tangible material. Again, Supreme Court has also dealt with this. We have discussed tangible material earlier, Bombay High Court decision, Aventis Pharma, etc. Here, the Supreme Court also in this Calvinatus case has said that tangible material is must. There cannot be a reassessment without tangible material, and there should be a live link. It should not be loose information, just saying something and linking something with the addition. No, it has to be a live link with the formation of belief. User has to be having a link with the belief, otherwise it is not permitted. So what amounts to change of opinion? We have seen that change of opinion is not permitted. Let us envisage few situations, let us understand few situations, let us analyze, and let us understand whether it is possible in that situation. Say for example, during the course of the assessment, query is raised. The assessee replies, which is accepted. In such a situation, certainly an opinion is formed. Correct. The assessment is already made, the query is raised and is accepted ultimately. Therefore, certainly a view is formed, and therefore, in such a situation, if there is a reassessment, it will not be permitted. It will be certainly a change of opinion. One more situation where query is raised, replied, accepted, but there is no mention to that effect in the assessment order. He does not mention specifically about this particular issue which has been discussed, because many a time the assessment order is a small order. It does not list down all the issues which have been discussed during the assessment proceeding. In such a situation, whether you can say that there is a change of opinion or you cannot take that argument. The answer seems to me is that yes, in such a situation also you can say that yes, though he has not mentioned in the assessment order anything about the particular issue, but still it is a opinion which has been framed, and now he cannot turn back and say that no, I want to change my opinion. But for that you will need to have proper documentation. Your assessment order, assessment records, your submissions, all those things need to be, or maybe your proceeding sheet also, if you want to take inspection of that, that also you will have to bring it to the table and say that yes, look here, he has already formed his opinion, though nothing has been mentioned, because ultimately the order is written by him, not by me. I am not the author to this order, so I cannot mention what is to be mentioned in that. My proper office record shows that yes, this has been discussed, and therefore the view has already been formed, and therefore you will be able to take recourse under the change of opinion concept. Then there will be a case where no query is raised at all. There is absolutely no query, and you file many details, because during the course of assessment we file many number of pages. Maybe at times the pages are in thousands. We keep on filing those papers. Every time we go to the office, there are 200, 300 pages which we keep on filing. The AO is absolutely, he just keeps it on his record, does not apply his mind to anything. What will be the situation on that? In such a situation, yes, again the explanation one which is there, which says that mere production of books of accounts or documents or evidence will not amount to full and true disclosure. Something similar will come here, that though you filed that, there is no proper opinion which has been framed by him, and therefore he will be having some easy way of making a reassessment. Within 4 years, of course, it will be very easy for him, and beyond 4 years also it will be slightly not difficult, maybe somewhat possible for him also, because ultimately he has not formed an opinion, it seems, from the record, from the proceeding, because he has just took the paper on his record and nothing further has been done. In this context, of course, this decision of Honda CL Power, Delhi High Court decision, which has been later on SLP dismissed by Supreme Court, there was a case of Honda CL where 14A disallowance was already 14A was already incorporated in the Act. But during the course of the assessment, the Assessing Council did not discuss about 14A. Though 14A was a retrospective amendment, the Council did not discuss anything about the AO with the AO about the 14A. Neither the AO asked any question about 14A, nor the Assessing Council discussed anything about that. Thereafter, the AO wanted to make the assessment on 14A, saying that 14A has been a retrospective amendment. I want to make an income has been escaping assessment. I want to do that. The assessing officer, the assessee said that no, look here, you already completed the assessment, you've seen everything. But there, the Delhi High Court said that yes, it was a case where you have not discussed 14A at all, though it was already there. And it's a big company, your counsel is supposed to know the law properly and supposed to make full and true disclosure for that, which you have not done. And therefore, 148 will be permitted in that situation. And Supreme Court has also dismissed SLP against that. So one has to be very careful. One cannot just take the benefit of the ignorance of the assessing officer and try to run away without the proper assessment. Otherwise, if you do that, then it is possible that 148 may come into picture if there is no query raised at all. So if there is no query, quite good chance for the department to say that the change of opinion concept does not apply here. Whether 143(1) situation, the change of opinion concept applies. Again, long back, Supreme Court in 291 ITR, Rajesh Javeri's case said that 143(1) is a situation where there is no opinion formed, first of all. It's a mere processing of written, and therefore, in such a situation, since there is no opinion formed at all, you cannot say that now there is a change of opinion, because 143(1) is mere processing. There is no assessment, and therefore, it will not be permissible for you to say that, yes, there is a change of opinion. Similar view has been reiterated, of course, by the Supreme Court in 373 ITR Zuwari's case, where it again said the same position which it has said under the earlier decision of Rajesh Javari. Of course, that after considering Zuwari's decision, the Bombay High Court in Khubchandani Health Parks case 384 ITR 322 has said that if the reassessment is based of belief, ultimately the reasons are such that the belief is not properly formed. The reason to believe is not properly formed. Just because it is 143(1) will not absolve the department from always saying that no opinion has been formed. After that decision of Zuwari's case, this decision has been done given by the Bombay Court, which says that reason for reopening is still essential. Though it is 143(1), reasons for reopening should be there, and without that you cannot make a reassessment. The distinguish between the case of Khubchandani and Zuwari is very material. One will have to read the decision of Khubchandani, and one will be able to find out some classic subtle difference between the two. A very good decision of Bombay High Court after considering the Zuwari's decision. Usha International, of course, these are some of the bullets which will run through. Change of opinion, postulates, formulation of opinion, etc. Reassessment is invalid. This can be referred, in fact, later on, so we may probably run through the slides. Department has having the other remedies, so therefore 263 is possible. Then in that situation, you can resort to 263 also. Yeah, I think this is for your reference. You can later on, a very good decision of Delhi High Court on change of opinion. One can read this for future reference. Let us look at one issue. Say, for example, reassessment is open on one reason. I also list down one reason just for a notional example. Say, non-availability of deduction. Earlier in the original assessment, ATIA is given to you. Now, in reassessment, the officer is saying that I am proposing to make a reassessment for the reason that you are not eligible for ATIA. And he makes the reassessment. He initiates the reassessment on that ground. During the reassessment, he also sees that there is a unexplained cash credit of section 68. Now, in the original assessment, this was already discussed in detail, and there was a genuinity of loan was accepted without any difficulty. Loan confirmation letter, ITR, bank statements of the lenders, etc. Everything was filed, was accepted properly. But now he wants to have a relook at the whole thing. He wants to say that no, now I feel that no, this is not a proper loan. This will be having some section 68 addition. ATIA is made. Let us assume that ATIA is also made. Otherwise, the Jet Airways controversy which you have seen earlier is also there. But he says that no, ATIA disallowances I am making. Also, I am making the addition under section 68, which has been already dealt with in the original assessment in detail. Now, whether he can do that. So, my question is whether the change of opinion concept is applicable only to reasons for reopening or to all the additions. Whether once he opens the reassessment, a valid reassessment is opened, whether he can again travel the issue which has been concluded with due satisfaction, with due evidences, whether that can be done, that is the question. Therefore, to understand the point in the right perspective, let us further once again look at the provisions of section 147. Now, here is a case where a same set of documents are being looked at again. So, whether it is permitted, per se it seems yes, but when one looks at the section 147 and reads the section again, and when you read this particular provision, this part, now it says that he is having the power to assess and reassess such income, and also, that is fine, any other income chargeable to tax. But any other income chargeable to tax comes with a rider which says that which comes to his notice subsequently in the course of the proceedings under this section. So whether our example, whether the section 68 issue has come to his notice in the course of this proceeding, or it was already there. It was already there, then probably it will not be permitted. And therefore, I would like to take a view in the given example that in such a situation, though section 147 allows him to make any addition and also is there, and also any other income chargeable to tax, but the question is that income has not come to his notice during the course of this proceeding. It was already there. Section 68 was already there. The loan confirmation issue was already there. Unexplained cash credit was already explained properly, and therefore in such a situation he should not be allowed to do that. That is my view, of course. So change of opinion has to be seen vis-a-vis not only the addition, the reasons, also for the additions also, not only for the reasons but also for the additions. That is what I would like to take a view on that. Again, full and true disclosure. If you make a full and true disclosure during the course of the original assessment, you will be saving yourself from the reassessment proceeding. So primary facts you need to disclose completely. That is one first and foremost thing. We have seen explanation 1 to 147. AO has to prove that full and true disclosure was not made. We have seen in earlier slides also this Hindustan Lever versus RB Workers case, where it is said that it is for the assessing officer to establish if he wants to make the addition beyond 4 years, reassessment beyond 4 years, sorry, to prove that there was not a full and true disclosure on the part of the assessee. That is the AO's duty. It is his burden to prove that full and true disclosure was not made. He cannot just merely say that there was no full and true disclosure. He has to record what should be, what has not been disclosed. Say for the last bullet, reason shall also indicate as to which material fact was not disclosed by the assessee in the course of the original assessment. The Bombay Stock Exchange decision is a very important decision, 106 DTR. Also Tata Business Support. All these three decisions, Bombay High Court and Delhi High Court, they have said that reason should also indicate as to which material fact, why you are saying that this was not a full and true disclosure. It is most important by the assessing officer, and it is his duty to discharge. And unless and until he discharges that, he will not be allowed to proceed further with the reassessment. Again, non-disclosure of facts. Many times it may so happen that the assessee himself is not aware about a particular fact during the course of the original assessment, and therefore in such a situation, he is not supposed to disclose the fact which he does not know, which nobody knows. Say for example, a case where maybe a suspicious dealer, I don't know whether this will be possible. It is too adventurous to say, of course, in today's situation, to say that I was not aware that this party is a bogus dealer, and therefore on the time when I made the I filed the details, I was also not aware that this person is a suspicious dealer or he is not filing his VAT returns or anything. If you are able to argue in that fashion that I was not able to, I was myself not aware and therefore I did not disclose, can you say that there was a full and true disclosure? And to come to our rescue, maybe if you want to build an argument on that, it will be very difficult, of course, in today's situation. But if one wants to build that argument, in the example of suspicious dealer, of course, it will be difficult. In some other examples, it may be possible to come to a conclusion that I was also not aware or the facts were not existed at that particular time. And therefore, this Satyanarayan Lohia's case, Kolkata High Court said that if the assessee does not disclose the fact which was not available at that particular time, then there is no failure on his part to make full and true disclosure. Again, if the AO fails to apply correct provisions of law, then of course, in spite of proper disclosure by the assessee, then it cannot be permitted. Delhi High Court decision. This was a case again, a contra decision, maybe you can say, from Gujarat High Court, where information from CBI was there that the loans accepted is genuine in the original assessment or bogus. Then in that situation, Gujarat High Court has permitted that yes, there was a valid information from the CBI. Now we are not sure whether the assessee was able to demonstrate that this fact was not existent at that time, etc. But in this Gupta's case, Yogendra Gupta's case, the Gujarat High Court permitted that yes, in such a situation, there is no full and true disclosure on the part of the assessee. What about subsequent decisions? Many a times, post-assessment, there is a Supreme Court decision which changes the situation, or there is a retrospective amendment which changes the situation. Whether this is sufficient to have a reopening of the assessment beyond 4 years, saying that there was no full and true disclosure on the part of the assessee. A Bombay High Court decision, both the High Court, both the decisions of Bombay High Court, Adana Sons as well as BIL, it is said that once the assessee was not aware and there is a retrospective amendment, then the assessee is on his part, there is no failure on his part, because retrospective amendment is nobody which anybody can dreamt of, and therefore something which comes up later on is not the assessee's knowledge, and therefore in such a situation the assessee cannot be blamed to have non-disclosure for a type of situation. Therefore, in such a situation, beyond 4 years, the reassessment may not be permitted. Disclosure need not be confined to return. Again, this is also very valid principle, because many a times we mention many things in computation of income. Of course, nowadays with e-return and everything, it is very difficult. But still, there are some notes which we can put up, of course, with limitation of words, etc. So, if you made some disclosure in your return, or maybe in your other communication, say for example, you file your return today, and then later on you can file one subsequent letter with the same officer within 1 or 2 days, mentioning your reasons of taking a particular view about a particular situation, and you say that on the basis of this I am taking this view, and therefore the return in this return I have not offered this amount as a taxable amount, is a capital receipt or whatever expression. In such a situation, your disclosure is there. It is not necessarily confined to your return, but it can be there in the communication and in the return in notes on accounts or a computation, or if it is in your audited accounts and notes to accounts. In such a situation, also the courts have held that it is a valid disclosure. Full and true disclosure is made by the appellant, the assessee, and therefore there is no reason to make reassessment beyond the period of 4 years. Decision of Supreme Court in Corporation Bank, there was an audited accounts and there was some notes given in the audited account. It was accepted by the Supreme Court that yes, it's a full and true disclosure on the part of the Corporation Bank, and therefore beyond 4 years, reassessment cannot be made. Similarly, Arthur Anderson also, Bombay High Court decision. Of course, Dr. Amin's laboratory, there is a decision which is against. But there it was in fact a situation where it was on facts, because of particular facts of that case, it has went against SSE. There was this SSE who was following a hybrid system of accounting during the relevant period, and some of the expenses were though not paid, purchase is not paid, he has booked it as an expense. In such a situation, Bombay High Court dealt with that case, and then they said that no, ultimately he has made some violation of the provision, and therefore there is no full and true disclosure on the part of the SSE. So that decision is of course against, but it is distinguishable. One can make further attempts and refer to the decision. We will be able to distinguish the fact. Otherwise, the decision in Arthur Anderson case and Corporation Bank said that disclosure can be by way of notes, in the return, the notes in the return of income or in the audited accounts, etc. There should not be any problem. Mere production versus production with discussion. Of course, explanation 1 will also trigger, and we will be able to come out of it if you are able to say that this is not amounting to mere production. There is a production of documents, as well as there is a supporting discussion which we are making with the assessing officer during the course of the original assessment. Yes. One more point is that, as all of us are aware, this reassessment is always for the benefit of the revenue. It cannot be for the benefit of the assessee. It's a one-way street sort of, where it has to be only and only for the benefit of revenue. There cannot be reassessment which can be resulting in the benefit to the assessee. The classic decision of Sun Engineering in 198 IIT Supreme Court has said that it cannot be for the benefit of the assessee at all. But the question comes whether unconnected items or connected items. Say for example, connected items, whether one can claim exemption or etc. And say, just to frame an example, say for example, property at the course of your return, the income gets escaped. But correspondingly, you also made the investment in another residential property, and you are eligible to Section 54 exemption, maybe for the full amount or maybe for the proportionate amount, depending on the facts of the case. Now, when you go for reassessment, can you say that you may make my addition for this capital gain, but at the same time, please grant me at least partial exemption for 54, which I am eligible. So whether that is possible. And there, yes, the logical view seems to be yes, the connected items at least, whatever, or maybe one business is not disclosed at all, and there are some expenses in that business. Whether you can claim that as a deduction, or is it that the 198 ITL Supreme Court decision has to be interpreted that everything has to be only to the disadvantage of the assessee? The answer is no. It has to be seen in a balanced portion, balanced way. If at all there are some connected items of expenses or connected claims related to a particular addition which is now getting envisaged under the 148, then certainly yes, you will be able to claim that. But now, contrary to that, if you say that, say for example, you are now getting taxed for say capital gains, your capital gains have escaped assessment, and now the assessing officer is under 148, he is trying to tax that capital gains. Can you now come back and say that also allow me depreciation under my 32 which I have not claimed earlier, which I have missed out? And therefore, though there was no scrutiny, or if there was scrutiny also during that time I have not claimed, whatever, can I now say that you also allow me Section 32 depreciation? The answer seems to be clear-cut no, because it cannot work to your advantage. It is a curative provision only for the department, not for the associate, and therefore it will not be possible. Uh, of course, income as per reassessment cannot be less than the original assessment. That is a very valid principle. This was a case where, as we said about unconnected items, the example which I have said, maybe a similar example. This Bombay High Court in Kexa Economica de Goa, where the assessee was trying to take the benefit of the reassessment and trying to use it for his advantage. Bombay High Court said, no, no, sorry, you cannot take that advantage. It will not be possible. Though total net effect, there was an addition, say for example, of 50 lakh, and my benefit which I am seeking is only 20 lakh. Whether I can do that? The answer is no. As long as the issue is same, on the same issue you can make a corresponding connected deduction. But you cannot say that you are making addition of 50 lakh, now give me benefit of 20 lakh on some other issue. That is not possible. So that is absolutely not allowed. It will be not working in your advantage. Now, so let us, after completing the provisions and also the principles, the two P's which you have finished, let us look at the procedure. Now, procedure, this is what somewhat the reaction of the person when 148 comes in, because 148 is a very dangerous situation. Whenever somebody receives notice, his reaction will be something like this, what you are looking at your screen at present. So you'll be worried what to do now. That is a big question, and what you should follow. Let us look at the procedures now. And for procedures, we have got the class of Supreme Court in GK and draft charts, 59 ITR page 19, a very, very, very fundamental decision. Though a very small decision, this decision has probably changed the entire gamut of reassessment proceedings. And what the Supreme Court says, let us look at this. Supreme Court says that once the assessee receives the notice under 148, the first and foremost duty is of the assessee to file the return. And if he so desires, he can also seek for reasons for issuing notice. If he so desires, he can ask for the reasons. He is eligible. Once the assessee asks for the reason, the AO is bound. He is duty bound. He is obliged. He must furnish the reasons within a reasonable time. Many times, many of the AOs are also, taking the benefit of the ignorance of the assessee. They don't provide the reasons. Let me tell you, if they are not doing it, they are digging their own grave, and it will be their reassessment will be fatal in fact. They have to provide reasons. If they don't provide reasons, of course, nowadays it is not that common. Those have also understood this impact, and therefore they do provide the reasons. But many a times, many of the AOs try to avoid that. So if you come across a situation where the AO is not providing you reasons, then you rest assured that your case will be dismissed. Your case will be decided in your favor. The entire reassessment proceeding can be thrown away against the assessing officer rather, if they are not providing the reasons. So assessee is entitled to file objections. Thereafter, once you receive the copy of the reasons from the assessing officer, you can go through the reasons, you can apply your mind, you can understand the correct legal position, and whether the reassessment is justified or not, you can conclude. If the reassessment is not justified, then you are having the right to file an objection, saying that I object to this reassessment for these reasons, and you can also give some supporting evidences if you want in that objection petition. And once the assessing officer receives that objection from the assessee, then he is bound to dispose of the objection by way of a speaking order. He has to pass an order before he proceeds for the reassessment. He is not allowed to proceed further. Once the objection is received, he has to first dispose the objections, and then only he can proceed for the reassessment. The disposal of the objection is also has to be by way of a speaking order. It cannot be just in a very one-line sentence that no, I hereby reject your objection. That is not permitted. That has to be a speaking order which has to put down all the reasons, the objections raised by the assessee, and the reasons why the objection is not valid. That is the procedure which the Supreme Court laid down. Now we have seen this here that everything has to be done within a reasonable time. Now what is the reasonable time? Reasonable time will by definition will mean reasonable. Something should be reasonable, but there is a guiding decision. Of course, it's a guiding. It's not a this decision of Gujarat High Court in Sarkari Khand Udyog is a guiding decision. It's not laying down any sort of binding precedent, but it is a guidance which has been given by Gujarat High Court. It says that these are the times which has to be followed by everybody, both the sides, assessee as well as the department, when the reasonable time is to be seen. So it says that once the assessee receives the notice, he should file the return in the prescribed form. The AO should within the prescribed he should file the return within the notice which has been prescribed in the notice. That should be prescribed in the notice, not in the return. The AO shall supply his reason within 30 days. So once the assessee files the return, within 30 days the AO should file the should provide the reasons to the assessee. In fact, this decision further says that the reason should be furnished without even waiting for the demand from the reason. So even if the assessee has not demanded the reasons, copy of reasons, the AO shall provide. This is what Gujarat High Court says. Even if the assessee does not ask. We have seen in the earlier slide where GK and Drive Shaft, Supreme Court said if the assessee so wants, he can claim the reasons. But Gujarat High Court has gone one step further and said that as a directive principle, of course, they said that the AO should, in all fairness, should not wait for the demand. He should provide the copy of the reasons without waiting for the demand. And thereafter, assessee should raise his objection within 60 days of receipt. So these are the time limits which the Gujarat High Court feels is a reasonable time limit, that it should be within 60 days of the reasons. Then AO shall dispose of his objection within 4 months of the receipt of the objection. And the Gujarat High Court also says that the above time limit shall apply to AO only where the assessee also adheres to the time. If the assessee does not adhere to the time limit, then the AO is also not bound by this directives which we are giving here. And therefore, they also said that the procedure of GK and Drive Shaft shall apply, notwithstanding that the time is not followed. So that GK and Drive Shaft is the standard thing. Gujarat High Court has said that has to be always respected. Again, when you receive notice under 148, please do ensure that you definitely seek for the reason. That is very, very required. If you don't ask for reasons, you are making some serious mistakes, and later on you can be repenting. Why you want to have the reasons? There are many things why one should have the reasons. One must seek for the reasons for this reason. First of all, you will be able to have a precise charge. You will be able to understand what is the exact reason for which, what is there in the mind of the assessing officer, what he is targeting. And therefore, you will be able to defend yourself properly. Without the reasons in your hand, you may not be able to, you will be doing a guesswork, and you will be just shooting the things in blind. Therefore, you will not be able to defend yourself case properly. Therefore, you must ask for precise charge which you will be able to understand. Again, when the reasons are given, the date on that reason, you will be able to understand whether the reasons are recorded. Suppose if it is recorded post issue of notice under 148, then you will be able to get the assessment question. So that is also possible. Whether 151 prior approval which is required by the higher authorities, whether that has been done or not, and whether later stage, if you feel that there is no reasons recorded at all, those things you will be able to do that. Further, if you get, if you want to try your luck under 152.2, of course, we have seen it is very difficult. We have seen that section. But if at all you want to, try to defend yourself under 152.2, you should know the amount, the quantum which the department wants to assess, make the reassessment on. And then only you will be able to come to a conclusion that yes, my addition is only, the addition which is contemplated is only 5 lakh, whereas already I have been assessed at 10 lakh, and then you will be able to defend your case under 152.2 also. For these reasons, it is very necessary that you should ask for the reasons. And as we have seen, AO must supply within a reasonable time. Of course, we have seen Gujarat High Court decision. Bombay High Court has also mentioned something similar to that effect. They have not given a time limit, but they have said that it should be within a reasonable time. It cannot be deferred for a long time. Once the demand for reason is there, it has to be respected within a reasonable time. For Mento Resorts case, Bombay High Court has said that. Of course, Kolkata third member also, and Bombay High Court also, buyer material again, buyer material science. These are the decisions we just said that it has to be done within reasonable time. This was the case of Bombay Tribunal also in 52 SOD, Tata International, where it is said that the AO supplies the reasons after a very long time, or maybe after assessment. Once the AO, in this case, in the Tata International, the reassessment was in fact completed. Thereafter, he supplied the reason. The Mumbai Tribunal said that no, what is the point in giving that reason thereafter? If you want to give the reasons, you have to give it within the time. If you give it after the reassessment is over, what is the purpose? The entire purpose of giving the reason is defeated. The person has not been allowed to defend himself in the right manner, and therefore it is nonsense. You cannot do that, right? And also it says that the reason supplied by the AO should be as recorded by the AO. Whatever is been recorded, you give the complete copy of that. You cannot say that this is just the gist of the reason I am giving you, only bullet points I am giving you, or I am giving you only few paragraphs of the reasons. No, that is not permitted. You have to give in entirety. You cannot give the bullet points. Otherwise, he will not be able to defend himself. Because tomorrow, suppose if he wants to go to court and wants to challenge your reasons, you should be allowed to have the recourse to the correct reasons which you have recorded. Because each and every word in the reason is important, and therefore it is not permitted to give only gist of the decision. So if you come across such situation, then you can take the benefit of this Mumbai Tribunal in Tata International. Of course, we have seen non-supply of reason is fatal. We mentioned that earlier, maybe a couple of slides back. If at all he is not giving the reasons, ultimately he is digging his own grave. Just refer to this decision of Videsh Sanchar Nigam, Bombay High Court also, and Telko Dadaji Dagji, again a third member decision of ITAT, which is available on ITAT online, where it is said that non-supply of reason is fatal in such a situation. It cannot be restored. The courts will not restore the matter back to the assessing officer. The assessment will be completely quashed. It will not be allowed to be redone, sort of thing. So reasons not demanded by assessee. Suppose we have seen in GK and DriveShop where it says that if the assessee wants, he can claim the reasons. Otherwise, he is allowed to not to ask also. But if the assessee does not ask, what happens? The Delhi High Court was concerned with such a situation in SafeTex case, where the ITAT in fact sent back in that case the matter back to the AO, saying that you now provide for the reasons. Though the assessee has not asked during the original assessment, I mean the reassessment proceedings, when the matter went to ITAT, ITAT said we are sending it back to the AO and I am asking the AO to provide the results to the assessee. The department went to the Delhi High Court and Delhi High Court said that once the assessee has not demanded during the course of the reassessment proceedings, then later on he cannot turn back and no, I have not got the results. That is not permitted. So if you don't demand, again a big mistake, that later on you cannot turn back. Of course, contra view of directive decision of Gujarat High Court, we can say, where he has said that though nothing has been demanded, you should give the result. But I would feel that the decision of Delhi High Court in SafeTech is more reasonable decision, where once you have lost your right, you purposefully ignored your right, you slept over it, then you cannot turn back. It is very difficult to take recourse to Gujarat High Court. The Gujarat High Court's decision is of course basically a sort of an advisory decision. It is not having a binding precedent to my mind, and therefore one should not take any chance. One should demand the reason along with the very first return which you file, or maybe a letter which you write to the assessing officer that please treat my original return as written in response to 148. Along with the same letter, you can write in the next paragraph, please provide me a copy of the reasons as required by, as per the direction of the Honorable Supreme Court in GK and DriveShop's case. Also, we have said that the assessee is having the right to take objection against the reasons. Once you receive the reasons, you have the right to make objection against the reasons. Now, can you alter the objections every now and then? Can you take an objection now, thereafter you can add further and further and further, all those things, whether you can do it? The answer is no. Well, like the department's reasons are sacrosanct. We have seen in the case of Hindustan Limited versus Hindustan Lever versus RB Wadkar, where we said that it is not, the reasons are sacrosanct, that cannot be altered. Similarly, the Bombay High Court was concerned here with a case where the objections which were treated, taken by the assessee earlier, the assessee tried to supplement it further before the High Court. At the time when the matter went to High Court, the assessee raised some further objections which was not raised before the officer. The Bombay High Court said that no, you cannot come again and again to us, and whatever you wanted to object, you should have objected before the officer. So it's a equity for all, sort of situation. You cannot, just like department cannot alter its reasons, you also cannot keep on altering your objection. So please be very careful while you're raising the objection. Raise all the objections which you want, which you feel that are correct, which are legal in your favor. You should take all the objections in the very first objection letter. You cannot alter that again. Maybe one or two objections which you raise out of 5 objections may fail, but don't hesitate to take that objection also if you feel that yes, you want to make some objection. Disposal of objection has to be by a speaking order. We have seen that. And if at all it is not done by a speaking order, say for example, he does not pass an order, then he will not be able to proceed with the reassessment. This is also one more classical decision of Asian Paints, Bombay High Court, where it is said that after disposal of objection, AO should wait. He cannot immediately proceed for the reassessment. Once he has disposed of the objection, he should wait for at least 4 weeks time. Bombay High Court said in Asian Paints that he should wait after disposal of objection, wait for 4 weeks time, because the assessee might go to the High Court for against your 148. So please provide that time to him. You cannot just dispose of the objection today, because many times otherwise the officer will do what? He wants to complete the assessment in December. He will dispose the objection on 15th of December. On 17th of December, he will issue 143-2, and on 18th of December, he will pass the order saying that I don't have much time left with me. In such a situation, again, it will not be possible. Asian Paints decision is very clear. It says that he has to give at least 4 weeks time to the officer, to the assessee, to proceed further in to a court of law if at all he wants to do that. And if you don't follow that, the direction of 4 weeks which has been laid down by Asian Paints, Then Bombay High Court subsequently, Neroni Chemicals and also Raman and Vale, in both these two decisions, the Bombay High Court said that if you have not followed that, not given that 4 weeks time, then in such a situation, your assessment is not valid and you will be liable to be quashed. Well, friends, I think these were some of the thoughts which I wanted to share with all of you on this subject. If there are any questions, is it there? There are no questions.
We can have some questions.
Yeah. Sharma ji is here, and therefore Sharma ji might like to have some questions. The members may take the benefit.
133 CA.
Yes.
Now DG can give the
Correct.
information. He can process also the information.
Yes.
And merely by sending it, it is not sufficient.
Correct.
But suppose he process the information, he makes inquiries.
Correct.
Then only it will be possible.
Yes. And
simply, only because simply he forward the information.
Yes.
That will not be sufficient. Again, even after amendment.
Correct.
Yes, we can repeat.
Sharma ji is asking a question. I don't know whether the participants have been able to listen to the question. I think Sharma ji, we can. Yeah. So Sharma ji is having a question whereby he is saying that if just because the DGIT gives some information, whether that will be sufficient or he has to process the information and then pass on to the assessing officer. I believe it will be the requirement. 133C requires that the now permits in fact the DGIT to process the information and provide it to the AO. Unless and until just mere loose information is given without processing or without application of mind, that may not be coming within the explanation to close CA. I feel so. He has to process it and then give it to you, give it to the assessing officer, and the assessing officer is allowed to rely on that information. And then in such a situation, it will be deemed to have income, would have deemed to be escape assessment. Yes.
Yeah. In 152 subsection 2, you gave one example. 5 lakhs addition was made and it was accepted.
Correct.
Later on, 2 lakhs addition, suppose it is made, you can contend that it is all 5 lakhs addition is already made. So now 2 lakhs addition cannot be made.
Yes.
So, but that will also apply in case suppose the earlier addition made were on account of loans.
Different issue.
Different issue. And now
Yes.
this 2 lakhs addition is on account of different issue. Still that argument is will be accepted.
Yes, 152.2. The question which has been asked by Sharma ji is that if the addition is made on different issue altogether, say for example the addition is made on account of disallowance of depreciation, say for example, and I am having the documents to support that my claim of depreciation is valid, and now the reassessment is being proposed on say 68 addition. Now whether in such a situation I can defend, can I say that the reassessment proceeding should be dropped? I feel yes. The answer is he can take recourse to 152.2 because 152.2 is not confined to any issue per se. In fact, there is no addition envisaged under 152.2. 152.2 permits us to stop the reassessment going further. I can seek the dropping of the reassessment on the ground that already you want to you made my depreciation disallowance in our example of 5 lakh rupees, and now you want to make addition of rupees 2 lakh rupees. So why don't you consider that ultimately your purpose is achieved, more than achieved, and therefore you don't have any power to proceed under 148. But for that I will have to demonstrate few things that yes, my claim was correct, and still you are not allowed, and I have not filed any appeal or revision against that. If I am able to demonstrate that, then I will be able to in fact stop the reassessment being moved forward. It will be a stoppage of that, and therefore the issue is not relevant thereafter.
Yeah. Third question is, you said a assessing officer recorded the reasons.
Yes.
Now he is transferred, and now B assessing officer cannot issue the notice. But suppose there is a time is still there, and he again applies his mind, and then after due satisfaction he issues the notice.
Certainly.
I think then he can be
certainly.
Yeah.
If the time is available, and if he again on the basis of the reasons recorded by the earlier officer, he also applies his mind, he comes to his independent conclusion that yes, the income has escaped assessment, then he can record reason, he can certainly definitely issue 148. And in fact, not only that, we have in fact one of the slides we have seen that there can be reassessment to reassessment also, that is permissible, that is not a difficulty. Yes.
And last question is that as you said, various courts have said objections means assessing officer has to meet the objections. But I suppose the objections are not made, and the reassessment order is passed.
Correct.
Then whether the assessment will be null and void, or it will be set aside.
It will be null and void. We have got this decision which says that non-supplier of reason, non-supplier of objection also.
Yeah.
I think of course, these are not the decisions on that subject, but I feel yes, it will be. I am not able to list down the decision right now, but definitely if any of the things, I have come across one decision of Delhi High Court very recently which says that any of the things which are provided under the section 147 or 148, if any one of the things are violated, then in that situation it will be a null and void. You cannot say that there is an irregularity and it can be cured. It cannot be cured. It will be a completely null and void assessment. Nobody can save that.
And as you cited Asian Paint Bombay High Court,
yes,
which has said that you after objections you have to wait for the
four
weeks
time,
for making the reassessment.
Correct.
Then otherwise it will be null and void.
Correct.
So all these cases which are passed in December or November, then all these cases can be challenged.
Provided the assessee is also cooperated within time. If after receipt of the 148 notice, if he has not filed,
assessee,
Yes.
whenever he has received,
and
But-
if
but
he
then-
is adhering to the time limit,
yeah,
and if the department is not providing the reasons in time, sufficient time to cover up that 4 weeks.
no, the question is there is no time limit for the assessing officer also. The assessment is getting time barred.
Correct. So
Then
if he is spending time in between, if
Yeah.
he is trying to waste the time in between so as to reduce that 4 weeks time of disposal of objection, then
One question.
sure, we'll finish this and then.
Yeah.
Yeah. So if at all the assessing officer is spending time, just buying time or wasting time, you can say, so as to not allow that 4 weeks time, then probably Asian Paints decision will come to the rescue of the assessee, and the courts will take a view that in such a situation, it will depend on the facts of the case.
Yeah.
If the assessee is also sleeping on the issue,
Yeah.
then probably that benefit will not be available to the assessee. Yes.
One question from Nikhil Surya.
Yes.
Whether statement made by third party can be made as basis for review?
Okay, the question which one of the participants, Mr. Nitin Furia, has asked is that whether the statement given by third party, say for example, the live example is of, I think, if I understand, is of the how suspicious dealers. Of course, it has been given before the sales tax authorities, or maybe some income tax authorities also. Say for example, this if the third party says that the loan which I have provided to the assessee is bogus, or I am only in the business of providing entry provider or something like that, whether that can be used as whether that can be considered as a material, tangible material, and the reassessment can be made on the basis of this. Answer is clear cut yes, because this is a tangible material. Certainly, something new which has come to the knowledge of the department. It's a tangible information. The department is very much within its rights to make 148. If you don't permit 148 in this, and then what will be the situation? You have to permit 148 in that situation.
no, but I think connected question is here the question is the assessee. The assessing officer is just relying on the information.
No, he will have to list down his
information received by the from the DG, say DG,
DGID or sales tax department
or whatever sources.
Correct.
And let's say, for example, recently in Bombay it has come that from Hiranandani Group has recorded the entries that they have received the cash from the flat buyers. And they have also offered during the course of search and seizure, they have offered that income as undisclosed income. Merely on the basis of the entries in the books of account, can the assessing officer assess the flat buyer? According to me, it will be difficult.
No.
Because the courts have stated now.
I agree with Sharmaji. What
Yeah.
Sharmaji is saying is correct, because merely on the basis of third party information, he cannot just proceed with the addition. What he has to do is on the basis of the third party information, that is the instigator, that is the starting point. He has to record his independent finding that yes, there is an income escaping assessment. If the reasons that is again where the value of the reasons recorded, the importance of the reasons recorded is there. If in the reasons he is saying that the information is received that this person is a Hawala dealer, but he does not say he has purchased goods from Hawala dealer, or maybe from the X party, etc. Some party, he has got the information that he has entered into cash transaction, but thereafter he does not proceed and say that I believe that the income has escaped assessment or something like that. He does not conclude that. Then it will be difficult. He has to have some independent finding after getting the information from the third party, maybe sales tax department, or maybe entry provider, or maybe the other party who is dealing in the property. his independent finding to the effect that the income has escaped assessment is very much crucial, and normally nobody misses on that. If he misses on that, then it will be fatal to the reassessment. He will not be able to proceed.
Apart from independent finding, the question is whether he should not have any evidence. He should be
No,
able
at the
to
stage of
prove issue
at the
of
stage of
notice,
issue of notice, there should
but
not
at
be.
the time of assessment, I am
Raymond
asking.
Woolen, yeah. At the time of
But
assessment,
at
yes,
the
of course.
assessment, he should have some
Yes.
evidence to say that yes, this flat buyer has paid the amount.
Yeah,
Then
I
only he
guess
will be
the question was about the validity of
valid.
reassessment.
Okay, okay.
Reassessment will certainly be valid, but of course the addition, whether it will be valid or not, that will be depending on the evidence which will be there. So go back to the case of Raymond Woolen Mills, where it said that at the stage of initiation of proceedings, there is no need to have a conclusive evidence sort of thing.
Yeah.
You can certainly investigate into it, and thereafter, if you are not satisfied, you can make the addition. If you are satisfied, you have to drop the addition also. That of course addition will depend on the documents which will be provided at the time.
And as regards these entries in books of account, we all know this Jain Hawala case where Advani's name was there, and recently Modi's name was there in some diary. These are the classical cases which we can rely on. Thank you, Ketan.
Any other question? Well, friends, thank you very much. I hope I have been able to do some value addition to your knowledge, and really let us hope that something can be shared. Thank you for joining, and I'll hand over the proceedings to Dinesh. Thanks.
You all will agree that we have reason to believe that this was an excellent session. Ketan Bhai has covered 147, section 147 to section 153, dealing with reassessment proceeding. He has also covered many issues which are relevant to reassessment proceeding, and he has referred to plethora of case laws touching on all and minute issues, even in the case of reassessment, dealing with reason to believe, objection, and everything. I think his presentation will be sufficient to understand the reassessment proceeding in depth. Thank you, Ketan Bhai, and thank you, viewers. I would also like to thank Ketan on behalf of you.
Went well.